Welcome to StockOdds. This is another StockOdds podcast, Odds and Ends with Dave Singh and Rob Friesen. Good evening, Rob. How are you this evening?
Good evening. Not too bad. Did you have a good Thanksgiving?
I did. Did you do Thanksgiving up there in Canada?
No. Well, we already had ours in October, but
You could have a double.
we sometimes do. Sometimes do. I have relatives across the line, but we not this time. So anyway, hope you had a good one, and let's kick this off. And lots to talk about. What a
kind of exciting
crazy exciting week. And then we had a half day, which was really quite a half day. I've seen it before. This isn't the first time we've had an event on a half day like that, Black Friday. There's been other times in history where something mysteriously comes up to make a significant discount. So the way we played it on Friday was, initially buy to see if you get any sort of a bounce, and there was a bit of a bounce, and then get out and just work with whatever you can in terms of your pairs or your one-sided trades, working with the flow of traffic. Certainly had some volatility and went down further after the initial bounce, but now it's recovering. Most of the futures are up. Just to run through that quickly here, we've got as far as where we're sitting right now, the Dow futures up 0.73%. We've got the S&P up 0.97%. Nasdaq up 1.21%, and the Russell up 1.13. So Nasdaq seems to be in the lead. I think that's kind of indicates a little bit of a defensive posture to some degree in terms of tech, going into the Nasdaq versus the Russell as much, and the Nasdaq more than the S&P. If it was truly just defensive, I think the Dow futures would be up more, and then the other ones there. So interesting to see that bounce. Now, when I look at what the symptoms are of the Omicron variant, what's been reported is sore muscles, tiredness, not feeling well for a day or two, no loss of taste or smell, might have a slight cough. There's no predominant, symptoms. So unusually mild. Obviously a significant variant and highly transmissible, they say, but symptoms are pretty mild. So maybe, and this kind of fits into what I've heard from some authorities is that when you get the mutations, they can be more transmissive, but they might be less powerful than the initial strain. Have you heard that too?
Yeah, they had that Dr. Scott Lee talking a couple days ago.
Mm-hmm.
And he said something similar too, that just because there's more mutations doesn't mean more severity, right?
Right. It's kind of like similar to what we have with the common cold. There's so many different varieties of that. We just refer to it as getting a cold or whatever, but there's so many different varieties. And again, they can continue to mutate. Probably why people need flu shots every year is because, there's a new type of variant out or something that they have to address. So anyway, it's probable that the market bounce is, that's going to continue for tomorrow. How much of it, happens in the overnight returns here where you don't really get much of a bite once it opens. So I would focus on some of the groups that might have been the most discounted and have the most to come back. The comeback tour. So what did you pick out for those groups that might be the most discounted and might have, positive odds, or people can look it up in the screener to see what the odds are?
Yeah, well, the sectors that were down the biggest were energy, financials, and consumer cyclical. And within that, I tried to drill down to the industries, and the specific industries were travel services, oil, hotels, motels, lodging, and some of the basic materials: aluminum, uranium, silver, lumber, copper, and casinos, resorts. So those are the most heavily industries within what was killed on Friday. And I went to the stock odds almanac to see what are the odds normally, and then within that, can we pick up some discount in one of the favored the sectors? So for the last 3 days of the month, biotech should do well. Typically, it's XBI, IBI, IBB, and QQQ, Nasdaq, tech, the chips, SMH, discretionary, XLK. Those are favored on a statistical basis anyway. So if you can catch some of those at a discount, that'd be great. And things that are good shorts might be oil, but we had such a big sell-off on oil on Friday that's probably the predominant factor, that we've already been down 13% on Friday. So shorting from that point doesn't make sense.
Yeah, that's a bit of a rough. I mean, because you might argue that it'd be the same as some of these reopening trades, like discretionary, airlines, cruise, hotels, oil, all that area was hit. So if things are coming back, then any one of those is a good candidate, perhaps, right?
Yeah, like here's one, JETS, JETS. That's an airline ETF that's expected to outperform the spider for the last 3 days, and it got killed on Friday, right? We had some of these airlines down 10 to 15% in that range. So if you could catch something in that ETF, maybe that's a good one, right? The odds are with you, and you have a discount to come from.
Yeah, I mean, the risk is that the media, the mainstream media, and what people tend to listen to never lets this go. It's like if they don't have some crisis to report on, where's the news, right? What do they have to say? Nobody's going to listen to the fireman rescued the cat out of the tree. It's got to be crisis. And so this is what concerns me, is they just don't, when they're like a dog biting on a bone. I mean, you can't get it away, right? So they're gonna do what they can to make this the most talked about thing tomorrow. The Omicron variant, and now there's a couple cases in the U.S. and a couple in Canada. I mean, it's like back in the beginning, when we had one case. What was it? The first guy in Seattle or something that got the COVID, right? Remember that?
Yeah.
Citizen number one, right? So it'll be like that. Yes. What worries me about the bounce? It's like, here's the problem with the trade tomorrow, is if we're up too much right at the open, like the futures are already bouncing back, they continue to go up. What if we're up 2 or 3%? You know what I mean? We're already up 1.25 on the Qs, on the Nasdaq futures. What if we're up 2% or 2.5? Right? Makes the trade kind of difficult, don't you think?
Yeah. We're already, I think we have half the return of Friday's fall has already come back already.
Well, I know, but what if it's even more than that?
Yeah.
So and we're still not out of the woods on this. That's the problem. So I don't want to give people the impression that we're playing completely for the bounce. We are looking for strategically the groups that might have been most impacted, that could be coming back from that. Maybe they're lagging a bit if the market continues to rally, but they have farther to go back in light of shrugging off this Omicron thing. But it just depends on where we are when we open. How much we're already up.
So on Friday, biotech was the strongest industry, right? And
well, interesting in the pairs. Look at we had Moderna was up huge in biotech, and Pfizer also. But look at what happened with Merck, right? Because it had some news that their therapeutic is not as effective as they had thought initially. So Merck was suffering. So I was thinking that I might look at going long Lilly and short Merck kind of idea as a pair. So Merck still might have some weakness in it. Lilly probably much less. Maybe Lilly will come back a little bit with a bounce. So looking at things like that as well. In fact, going through some of these, on the map of the market, if you just look at that, Verizon was up, AT&T was down. Electronic Arts was down, and Take-Two Interactive was up. There's a lot of pair combinations that you might, look at, right? So again, Lilly was down, but Merck was down a lot more. And anyway, so it'll be interesting. There was only a little bit of green. I mean, Netflix was green. Again, stay home economy. So the stay home economy stocks, right, versus the reopening stocks. This is a big thing not to be ignored, though, because right away as this thing started to hit, the ones that were the most impacted were in the area of hospitality, airlines, and all that stuff. And the ones that benefited the most were like, well, if we're all going to be locked down again, which isn't probably the case. But we got to get back to our Netflix and
Clorox was up again.
Clorox up again, yeah. Wasn't that Clorox something during the March, April, May of 2020? Wow. I mean, it was making new highs every day, and when the market was going down like crazy, right? So anyway, so go through some more of the sectors there.
Yeah, let's see here. I went down to a 3-day perspective since we're down to the last 2 trading days.
Right.
But again, things like QQQ are expected to outperform. XLE is expected to underperform the spider. Airlines, Jets is expected to outperform. And energy is the biggest mover. I mean, they're down 13% Friday, up 5% pre-market.
Yeah, it might have a bounce. It might come back, but I mean, it was already kind of rolling over before this too. It kind of went up with the strategic oil reserve announcement because we felt it fairly minimal in terms of impacting the price of oil. So oil went up a little bit, but then with this COVID variant, I mean, it really tanked on. And it was only a half day for it to be down that much. Is pretty crazy.
And here's one more. The IWM is expected to underperform on a 3-day basis and on the last trading day of the month. So you're already seeing that flight to big cap quality, right? That's a defensive posture. So it's a little risk off if people are going to QQQ rather than IWM. And that ties in with what the stats show. So that might be something to be longer, bigger cap and shorter, smaller cap for the last 3 days, especially the last day of the month.
Mm-hmm.
Yeah, that's
so you figure we can approach tomorrow kind of a bit with a risk on in some of the categories that got most impacted, but be a little bit cautious with the smaller cap still, and be kind of cautious with the energy. We still don't know how that'll play out. So maybe go into some of the safer stuff like, some of the industrials, some real estate, some financials. Financials were impacted pretty significantly. Do you think that was more because, this is going to cause even more inflation, therefore they're going to have to raise interest rates more aggressively?
Well, I think the 10-year fell pretty hard on Friday, right? So financials went in sync with that.
Yeah, that's true. Yeah. Okay.
And we've recovered a little bit of that drop in the 10 years.
Okay. So we'll have to. You can't really make a decision on financials without considering what the 10 years doing tomorrow.
Yep.
Same with real estate is somewhat impacted by that. So probably your safer areas might be utilities, even though they're more a defensive thing. You know, when people are kind of like nervous about something, they might still gravitate a bit more to the utilities. Like money doesn't leave the market as much as it kind of repositions itself, right?
Mhm.
So we might see utilities bounce back a bit better.
Communication services was stronger than.
Yeah, well, you've got that bigger Nasdaq 100 stuff in there too,
Mhm.
right? So, you know, yeah, we should see that. Some technology, consumer cyclical. I mean, I wouldn't have a problem going into, you know, the hospitality and some of the travel areas for a bounce back. I mean, I think they were impacted more than they need to be under these conditions. So,
Yeah, those cruise lines were down, I think, close to 15% at one point.
yeah, I mean, you know, it was a bit of a blindside to the market, I think, for what happened there. But at the end of the day, you know, is this expected to be as bad as what we had to deal with when COVID first came on the scene? I don't think so.
I don't think anything ever will be. This is just, we're going to have variant after variant, right? This is just like when Delta variant first came out, there was kind of a shock and hand waving going on. This is similar to that. And I think even prior to this, there was lockdowns in the UK and Austria. That was kind of making the market a little bit nervous, but this doesn't seem to be anything worse than the discovery of the Delta variant spreading everywhere. So we've seen that before, and the market's rallied into new highs. So it doesn't. That's more likely to be like that than not.
Yeah. Well, I mean, we're coming into the season where you know, the market breadth is supposed to be pretty good. You know, we're going into the second month of the best 6 months of the year. There's a lot that the market should be firing and being pretty healthy. We should talk about December 1st, the turn of the month effect, because if you got your seasonality calendar up,
Yeah, but
like that falls on Wednesday, right? So right in the middle of the week. So is it supposed to be a strong turn of the month effect? Like we have a pretty benign last trading day of the month. I mean, it's not a down day for most of the market except the IWM. But so it's not a strong down day on November 30th. But what about the first of the month? Is it a big up day?
for December 1st, IWM is expected to slightly underperform the Spider. Spider is expected to be 0.12%,
Okay.
and the IWM minus 0.24. So not a really big day on that first day.
What about Qs?
Qs, we got Qs are expected to slightly underperform the Spider as well. So it doesn't look like a really robust first
So
day.
it's not a super strong start to the month for December, eh?
No.
Interesting. Okay. All right. Well,
the last 5 days of the month usually are pretty strong, though.
yeah. Well, we got the Santa Claus rally thing, and that sometimes can happen before Christmas, and sometimes it happens between Christmas and New Year's. But anyway, let's see. Well, I think the edge tomorrow goes to, first of all, our audience being aware of which groups have been impacted the most from, you know, last week's weakness, specifically on Friday, half day. And to be aware that, you know, if the market is starting to discount this, which it seems to be already, that, you know, there's a little bit more risk on coming back in, and it's going to probably go into those areas that, you know, are the reopening economy stocks rather than the stay-at-home stocks. I think it was just, it was a light volume day on Friday. Like there's a lot of people not around, not participating, a lot of institutions offline. So it was just really a perfect day for a sucker punch.
Uh-huh.
Do you know what I mean?
Yeah.
And, we've seen this movie before with other things, and the market did come back from it. So, pick your battles. One thing you can do is you can take a group, let's say the travel, we've got everything from the booking companies to the airlines to the cruise and so on. You could take that and go, okay, if I was to buy some of those stocks, could I have the ETF, like with the airlines, for example, could you have jets standing by as a hedge? You know that the jets is supposed to outperform in the last 3 days. We know that it had a pretty big discount. But if you wanted to go into the actual airline names, like American Airlines and Delta and so on, can you do so and then, have that hedge standing by, right?
Yeah, it's a good play.
Yeah, that can be one approach to lower the risk, or to at least, have an option. The way I would do it is if the market's not opening up too much, I'd like to get those airline stocks on right at the open and wait and look for that bounce, continue to move and follow through. And if you're not getting that within a reasonable couple minutes there, and it's looking like, wait a minute, here's another wave of selling going to come in, then I would just lock that hedge on right away. And by the end of the day, it could still resolve itself. We may have a volatile session with a lot of waves, because like I said, I don't think the media is going to let go of this bone that they have. And I don't know how people are subject to it. Everybody seems to be afraid. Everybody that's vaccinated is terrified of somebody who's not. Everybody that's vaccinated is, got a mask on as well, kind of thing. It's the kind of environment that we're in. Everybody's so afraid. So how much they buy into this story and how much the media can make of it, I don't know.
But this weekend in California, I saw every parking lot full, no fear at all, right? So consumer behavior, I don't think it's changing at all with this latest variant.
Yeah, and it's going to be pockets of like that, so for sure. But anyway, let's leave it at that. And good trading. Probably going to be very selective on any Russell stocks. Kind of going to focus more on the best in breed of the S&P 500 and Nasdaq 100, right? Having the ETFs obviously standing by for hedges. I'm significantly going to look for things that might be really subject to underperforming tomorrow as well. Some shorts that, just no matter which way you look at it, they're not going to be that appealing. If the market wants to roar back, they're just not going to be appealing for people to purchase. If the market wants to sell off, they're probably get included in the sell off. So if I can find something like that, it'd be very helpful.
Good.
Okay.
All right. Good luck.
All right. You too. Take care.
Thanks.